The first light over Washington is a pale electric blue, but the city wakes to a sound that no one expected, a low metallic hiss that rolls across the White House lawn. A single notification flashes across every financial terminal. Interest rate hike has failed to transmit. In the same instant, the U.S. Treasury Department broadcasts a terse communiqué that the debt ceiling has been reached and the automatic payment system is offline. The very pulse of the economy shivers. Markets, once a humming engine, sputter into silence. A tense pause. In the heart of New York, a trader's face turns the color of old paper. He watches in real time as the Treasury bill auction slides into chaos. The bid queues collapse. The electronic matching engines go dark. In the trading pit, dealers stare at their screens, the red lights of failure blinking like a warning. Across the country, banks' automated payment systems freeze. Payrolls, mortgages, Social Security checks, all the lifelines that millions rely on, stand in suspense. A tense pause. Within minutes, the Federal Reserve's open market operations stall. The global dollar, once the silent hand that guided markets, now wavers like a candle in the wind. International markets react with a jittery tremor. The yen soars, the euro falters, Asian stocks dip. Governments, in emergency meetings, exchange urgent pleas for liquidity. A tense pause. For an hour, the world feels the tremor of a giant slipping. The invisible architecture that had held the modern economy together cracks open, exposing the hollow bones of a system built on the fragile, yet unshakable, thread of trust. How did this unravel? How could the nation that built empires on debt suddenly find its foundation eroding? But to understand how this house of cards could fall, we must return to the moment the first card was laid. It was a summer in 1790. James Madison, then a young lawmaker, stood before the nascent Congress and proposed a bold, audacious plan. "Let us borrow," he said. "For the future we trust that our creditors will pay back what we owe." The idea was simple. A government could borrow in its own name, backed by the faith of its citizens. This gamble, a quiet revolution in fiscal thought, would become the cornerstone of a nation's economy. A tense pause. From that whisper of trust, the debt market sprouted. Early in the 19th century, the Treasury issued short-term bills to pay war expenses. The bills were bought by merchants, bankers, and citizens, all swearing by the promise that the government would honor its word. Trust was a contract, a covenant that ran deeper than any banknote. This was not a loud proclamation. It was a silent agreement that the U.S. would never default. That silence became the engine of the nation's rise. The first spark of growth exploded when the Civil War erupted. The Treasury seized power, issuing the first greenbacks paper money not backed by gold. The war effort required unprecedented sums. The government tapped the trust that millions had placed in its words, issuing massive debt. The war ended, the economy bloomed. Across the centuries, each crisis reaffirmed the promise. The Great Depression did not shatter trust. Instead, the New Deal Social Security program expanded the trust net. The 1970s stagflation saw the U.S. abandon the gold standard, making the dollar float, yet the faith in the Treasury's ability to manage its debt grew stronger. The quiet revolution of the 1990s, the rise of the U.S. Treasury as the benchmark for global safe haven assets, went unnoticed by many. In the bustling trading rooms of Wall Street, investors began buying Treasury securities in staggering volumes, turning debt into a commodity that powered the global economy. A tense pause. By the early 2000s, the Treasury market had become a backbone of institutional investing, a safety net for pension funds, a cornerstone of international finance. Every corner of the world, European banks, Asian conglomerates, Middle East sovereign funds had woven the U.S. Treasury into their portfolios. Trust had become an invisible architecture that spanned borders, industries, and generations. A tense pause. But the very thread that bound the world now trembles. The paradox of trust is simple yet cruel. The more you rely on it, the more you risk breaking it. Trust fuels growth. It allows a nation to borrow billions without immediate repayment, to spur infrastructure, to fund innovation. But if trust falters, that same growth engine can become a powder keg. Today, the cracks are not a distant echo, they are here, palpable. Politically, the debt ceiling debate has become a battle of ideologies. Every new administration faces a political brinkmanship that threatens to halt the flow of capital. A single misstep, a refusal to act, can ripple through the markets. Technologically, the Treasury's digital payment systems, once a marvel of automation, are fragile. Cyber threats loom, and a single breach could incapacitate the payment infrastructure. Resource depletion is a quieter, slower crack. The U.S. Treasury's reliance on fiat currency, backed not by tangible reserves but by collective belief, is increasingly strained by inflationary pressures and global confidence erosion. Recent warnings have proven the danger real. In 2021, a glitch in the Treasury's electronic auction system caused a delayed payout, sparking panic among small businesses awaiting critical funds. In 2023, a sudden spike in Treasury yields caught markets off guard, sending a wave of short-term borrowing costs to new highs. In 2024, the Federal Reserve's unprecedented interest rate hike pushed the Treasury bond market into volatility, demonstrating how fragile the system has become. These incidents are not theoretical. They are modern warning shots that signal a looming crisis. A tense pause. Now, back at the moment of crisis, we see the cascade in brutal clarity. Within the first hour, the U.S. Treasury auction fails. By the end of the day, the federal payment system is offline. Within days, the federal payroll system stalls retirees and federal employees await their checks. By the second week, the stock market sees a 12 drop, the bond market experiences a 25 loss in value. The sudden surge in Treasury yields drives down global liquidity. By the end of the month, several major banks have run short on reserves. A tense pause. The dominoes don't stop there. Governments in Europe reliant on U.S. Treasury assets face liquidity crunches. The euro degrades, causing a sudden drop in the value of European sovereign bonds. Asian economies, deeply integrated with the dollar, see capital flight. In a matter of weeks, global trade slows, commodities prices spike, and unemployment rates climb. The economic engine that has run for 2 centuries sputters, stalling the global machine. A tense pause. Yet this is not the first time a great system has collapsed. The fall of Rome, the dissolution of the Soviet Union, each were marked by a loss of the trust that held them together. Trust is a double-edged sword. It is the glue that binds societies, but when broken, it tears them apart. In the silence that follows, one truth rings louder than any siren. We were building a structure on a fragile promise. The debt we have accumulated, the institutions that have grown around it, the global economy that now hinges on a single nation's ability to pay, are all woven from the same thread: trust. If we do not heed the cracks, if we continue to lay bricks on a house made of paper, the collapse will be inevitable. The weight of that history presses on the present, a chilling reminder that the engine of our prosperity is also our potential downfall. In the end, it comes down to a single word: trust. And the paradox is clear: the more we trust, the more we expose ourselves to the terror of that trust unraveling. Remember that the invisible architecture of trust can either be a sanctuary or a fault line. The choice is ours. Thank you for watching. If you found this journey through history and possibility illuminating, subscribe for more deep dives into the forces that shape our world.
Found this interesting? Subscribe to the channel. Give this video a like, share it out, and drop your questions or ideas in the comments. Until our next adventure.